Alright, right now, we are living through a wild 24 hours in the global market. The headlines are coming in faster than most traders can keep up with. Just 10 hours ago, a bombshell announcement dropped on Truth Social that has sent shockwaves from Brussels to Wall Street. President Trump has officially announced that the US will be raising tariff on European Union cars and trucks to a staggering 25%. 25%. According to our news here, US to raise EU or Euro auto tariffs to 25%. Now, you might be asking, why am I talking about car tariffs on a crypto channel? Well, if you were watching the charts when the news broke, you saw exactly why. Bitcoin, which has been enjoying a nice rally above $78,000, immediately retraced. And why? Because in the world of high stakes trading, uncertainty is the ultimate enemy. So, in my own opinion, as a trader, I have seen this movie before. Whenever the word tariff starts trending, the risk of switch gets flipped. Big institutions don't like surprises, and a 25% tax on one of Europe's biggest exports is a massive surprise. Even though Bitcoin is decentralized, it still reacts to global liquidity and trade tensions. To me, this is not a sign that the bull market is over. It is a sign that we are entering a high volatility trade war phase where your diamond hands are going to be tested. So, let's start with the first question. Why is the US tearing up the EU trade deal now? According to the president, this is not just a random move. He stated that the EU is not fully complying with the trade deal they agreed on last year at his golf course in Scotland. The US side is frustrated with how long Brussels is taking to finalize the paperwork. Trump's message was loud and clear. If you don't build it here, you're going to pay you are going to pay to send it here. So my own opinion about this is that this is a classic art of the deal 2026 style. By putting the 25% price tag on European cars is forcing the EU's hand. But for us here in the crypto space, the concern is the tit for tat retaliation. If the EU responds with their own tariffs on US goods, we are looking at a full blown trade war. Historically, during the trade wars, investors flee to safe havens. Usually that means gold, but in this year, 2026, Bitcoin is fighting for that same title. We are watching a real time experiment. Will Bitcoin act like a tech stock and fall, or will it act like digital gold and rise as the trade war heats up? Now, the next question is, what is the connection between the Strait of Hormuz and our portfolio? With the tariff news was breaking, the president also gave an update on the US-Iran conflict, confirmed that the Strait of Hormuz remains 100% shut down by a US blockade. This is a massive deal because about a fifth of the world's oil and gas flows through that narrow waterway. In my own personal opinion, this is the inflation ghost that keeps traders awake at night. When the strait is shut, oil prices go up. When oil prices go up, shipping costs for everything from iPhones to Teslas go up. This creates cost push inflation. If inflation stays high because of the blockade, the Federal Reserve might be forced to keep interest rates high for longer. And as we know, high interest rates are usually a headwind for Bitcoin. So my take is that the Hormuz blockade is actually a bigger long-term threat to the crypto rally than the core tariffs. Our next question is a US-Iran peace deal the ultimate bull catalyst? Despite the blockade, there is a glimmer of hope. Iran has reportedly sent a new proposal to the US through Pakistani mediators. Trump told reporters he isn't satisfied with it yet, and it is unsure if a deal can be reached. But the very fact that they are talking is what pushed Bitcoin above $78,000 earlier today. In my own personal opinion, the market is front running peace. Everyone knows that if the war ends, the Strait of Hormuz opens, all prices collapse, and the risk on sentiment will explode. I believe Bitcoin is currently a geopolitical hedge. If a deal is signed, we could see Bitcoin fly past $80,000 in a matter of minutes. But until that pen hits the paper, we are we are stuck in this wait and see volatility trap. Now, can Bitcoin decouple from geopolitical chaos this year of 2026? This brings us to the question, can Bitcoin ever stop reacting to Truth Social posts and trade wars? My own personal opinion is that we are not there yet. This year, 2026, Bitcoin is more integrated into the global financial system than never before. With the ETFs and the institutional mining, Bitcoin is a macro asset. It is a thermometer for global stress. When Trump says tariffs, the thermometer spikes. When he says negotiations, it cools down. For the average trader, this means you can't just look at the 1 hour chart anymore. You have to keep an eye on the news in the Middle East and the trade balance in Europe. So, what should be our strategy for this coming week? With the tariffs taking effect next week, we are heading into a stormy Monday. So, my opinion is that my strategy is simple. Don't over leverage in a news driven market. The 25% tariff news caused by a brief retrace to the lower $78,000, but notice how it didn't collapse. The buy the dip crowd is still very strong. If you are a long term holder, these headlines are just noise. But if you are a swing trader, you need to be very careful next week. The EU's response to these tariffs will be the next big trigger. If they play nice, we rally. If we get rough, we might retest the mid 70K levels. So we need to stay sharp, keep our eyes to the ground, and remember, volatility is where the money is made. As long as you have the stomach for it. So this finally ends our video. Thank you very much for watching and see you on the next one.